Pablo, good to see you. How you doing? How you been? Evening, Miles of CMF. Joe, good to see you. How you doing? How you been? JP, good to see you as well, brother. How you doing? How you been? Harry, good to see you as well. How you doing, Harry? Okay. By the time everyone tunes in, let's do the intro, disclaimer, and what we're going to go through on tonight's live. And everyone's pretty much tuning in for the first part of live straight after that. Welcome to the CMF Live if you're watching this for the first time ever. The CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. Pretty much vital information for you to know about regarding the world completely transforming into a digital space. We also do Q&As on this live as well, which means if you ever do have any questions or any statements, put it down inside the comment section. More than happy to help you out. And this is episode 355 of the CMF Live right now. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So, welcome to the CMF Live. If you're watching this for the first time ever, if you're regular, let's go CMF. By the way, thank you so much to everybody from the CMF who's watching right now, right off the bat, for liking and retweeting this live. If you're watching this on X, thank you so much to everybody who's liked and retweeted this live. So far, we're at 8 likes right now on X and 7 retweets right off the bat. Thank you so much to everybody who's liked and retweeted. CMF members, if you haven't liked or retweeted and you watch this on X, please like and retweet. If you're watching this on YouTube, just drop a like or even a comment outside the live if you want. Now, on tonight's live, we're going to talk about a mixture of news. We're going to be talking about essentially the newest data that's came out regarding the essentially the PPI that's affected the market space ever so slightly. We're going to talk about what essentially the Treasury Scott essentially Benson said regarding Bitcoin purchases by the United States government. We're going to talk about some announcements regarding some major essentially establishments and institutions, some regulation talks to go through, and obviously, as always, Ripple news to go through on tonight's live as well. Now, the first news we are going to be covering on tonight's live is regarding the PPI data, which should give you some of your better essentially idea of why the market ever so slightly dropped today. And also the second news we're going to go from tonight's live is going to give you a perspective on why Bitcoin slipped a little bit more today. Now, before we go through the first news, let's go inside the comment section first, and then we'll go straight into the first news. Let's see where we're at. We were at here. Hi, Miles. Just wondering what interesting news you've got tonight. Adi, good to see you. How you doing? PPI data news to go through on tonight's live. Treasury Scott Benson had some interesting things to say regarding the market space on tonight's live. We're going to go through some other essentially announcements to go through on tonight's live as well. So quite a bit of interesting news, and also an update regarding what I shared with you yesterday regarding Google Play Store, essentially asking every sort of crypto, essentially non-custodial and custodial wallets for licensing. There's been an update on that matter because Google received a lot of backlash on what they essentially said yesterday. Hi, Miles. How's things? Artistic, things are great. How's things with you? Good to see you as well. Hi, Miles. When we see XRP going up, keep seeing going down, bro. Johnny, you got to give a little bit of time. If the market the market can't just go essentially, rocketing up just because we know it has to, regarding, for example, XRP in this case. Because the case is essentially being over with, the regulations are on the way, the ETFs are on the way, Ripple accounts, essentially banking charter license, Ripple also Fed account, and so on. We know everything that's going to be happening down the line. But the issue is the market just can't go one side, because if it does, then everybody just puts 200x leverages, and the house doesn't win. The house has to win along the way. So there has to be turbulence along the way until we reach those targets, essentially. Otherwise, they'll just be giving money away to us. Hello, Miles and CMF commenters. Good to see you. How you doing? How much amount of coin realistic you need for safe future and live peace? As much as you can, Johnny. I'll be very honest with you. Good evening, CMF. Denise, good to see you. How you doing? Good evening, Miles. How are you? I'm doing great. Callie, good to see you as well. How you doing? Now, good day, Miles and CMF. Mike, good to see you, brother. How you doing? Perfect timing, because we're about to go through the first part of the live, which is regarding the US PPI data. What's good, Miles and CMF? Let's go. Ray, good to see you as well, brother. How you doing? Perfect time. About to go for the first news on tonight's live, which is regarding the PPI data, which is also what's caused the market space to go slightly down. It's not drastically down, but it is slightly down. Max, this PPI data will have an effect on the market space. 48 hours max, probably 24 hours, 36 hours after that, it's probably going to go away. The market's going to go to a different part. It's going to essentially move a different set of news. Now, US essentially July wholesale price surge heightened inflation concerns. The US Bureau of Labor Statistics reported a July surge in the wholesale prices driven by service inflations and tariffs, presenting inflation concerns for the economy. That's why essentially the data that came out with this is why the crypto market went slightly down. Market volatility surged as traders adjusted expectations for Federal Reserve rates and decisions following essentially the unexpected inflation spike. Wholesale prices inside the United States increased sharply in July, with the producer price index, PPI in other words, marking essentially a significant rise not seen for over a year, The US Bureau of Labor Statistics highlighted service inflation as a key driver. Coupled with tariff-related pressures, these developments underline the persistent threat of inflation in the US economy. Market participants now question the likelihood of the Federal Reserve's cutting interest rates much more sooner. That could be a positive if Jerome Powell did so. In July, the index for final essential demand rose 0.9%, seasonally adjusted according to the official PPI report. Analysts and investors have adjusted their strategies, reducing their probability of rate cuts for the upcoming essentially Federal Reserve meeting. Immediate responses saw traders modifying their positions in financial markets, and according to the market analysis, significant shifts were observed, especially within the Fed's futures. Although no major institutional statements were made so far, the market's statements were made, and the market's interpretation essentially of the data cast an uncertain shadow essentially over the anticipated monetary policies and moves. Bitcoin essentially trading roughly about time of this article at around $118,234.72, holding essentially a market cap of $2.35 trillion, while dominating essentially 58.83% over the market. Over the past 24 hours, Bitcoin saw a price decrease of 2.84%, despite a weekly increase of 1.43% on that matter. Data from CoinMarketCap shows that trading volumes of $109.70 billion within the last essentially days. These movements follow the historical patterns of highly essentially volatile and essentially movements in macroeconomic events affecting cryptocurrencies. These developments underline the persistent threat of inflation inside the US economy. Market participants now question the likelihood of the Federal Reserve cutting interest rates soon. Yesterday, everybody essentially in terms of traders on Wall Street were anticipating interest rates to be happening 100% or at least 99%. Today, because of the PPI data report, traders are now saying maybe we won't have interest rate cuts because of the data that was released today. Interesting enough, Bitcoin, the golden goose who is supposed to be reacting like a risk-off asset, a safe haven, let us down again. Honestly, Michael Saylor always goes on about how Bitcoin is the golden goose, it's the golden egg, it's the safe haven, it's the asset you should be going for when inflation is high. Unfortunately, when inflation is high, Bitcoin doesn't react the way Michael Saylor sings about it. On that topic of Bitcoin, it seems like the United States is not going to be buying Bitcoin. So it seems like Michael Saylor's dream, or shall I say wet dream, of the United States government buying Bitcoin, never going to happen by the looks of it. Bitcoin also fell a little bit more today when the Bitcoin maxis, who told everyone for the longest time that the US is going to be buying Bitcoin no matter what because it is the chosen project, Bitcoin has just fallen below essentially $119,000, enough to surprise many investors. This drop follows the statements of Scott Benson, the US Treasury Secretary. To be fair with the Bitcoin maxis, though, Scott did tell the Bitcoin maxis he's going to do everything he can to get Bitcoin essentially into the US government, is what he said a while ago. Today, unfortunately, he comes on live news and tells everybody, we're not going to be buying Bitcoin. Instead, we're just going to use the assets we've seized. According to some crypto analysis, these statements could have long-term consequences on the crypto asset market. In my point of view, it doesn't really have long-term consequences on the crypto market space. No, it has long-term consequences on Bitcoin because the US government isn't buying Bitcoin. It's got nothing to do with XRP or XLM or XDC or HBAR or AVAX or TON or essentially Ethereum. It's got nothing to do with these tokens, just Bitcoin. They only mentioned they're not buying Bitcoin, not saying they're buying everything else, but they didn't mention anything else. They just said, we're not buying Bitcoin. Bitcoin falls below $119,000 after the US Treasury announcement to stop buying for its street reserves. The US Treasury decisions raises concerns about the future of institutional adoption of Bitcoin. Yes, it does, because if the US government has now just come out on live news and said, we're not buying Bitcoin, that's going to send a ripple effect around, to the entire world that the US government is not buying Bitcoin. If the US government did buy Bitcoin, then obviously other countries would jump on the bandwagon. I'll give you an example. The US government comes out with the Genius Act. Essentially, it's voted on by senators, approved by Donald Trump, and signed into law. Straight after, Hong Kong comes out with the news they're coming out with essentially stablecoin laws. So did Singapore, so did Japan, so did South Korea, and so did essentially other countries. Even Russia came out and said, we're coming out with stablecoin laws. Even Brazil came out with stablecoin laws. Even the EU started tightening their stablecoin laws, only because the US did it. So now imagine when the US doesn't do something, what do you think is going to be happening in terms of the other countries? Well, the other countries are going to look at Bitcoin and go, well, if the US is not buying it, then neither are we. Earlier today, Bitcoin briefly reached essentially an all-time high of $124,457. At the time of writing this article, the BTC price has dropped below that psychological essentially threshold. This drop comes after Scott Benson, US Treasury Secretary, confirmed that the government would no longer buy Bitcoin for its reserves. It could also be that the US government realized that Bitcoin maybe was created by an entity or a government out there, that instead of buying that asset because it's a bit risky not knowing who the creator of the asset is, that it's just better for them to hold what they do have. If it's good, it's good. If it's bad, it's bad. They just, seize that asset. They don't really invest into it, so they don't really lose much on it if they just, hold the seized Bitcoin rather than buying an asset. Nobody knows who created it, or they do know maybe who created it. We're going to find that out. But Michael Saylor, it's going to be an interesting ride for him, because he couldn't get Facebook, Meta, to buy Bitcoin. He couldn't get Microsoft to buy Bitcoin. So he decided to go overseas. He went to India, tried to get the Indian government to buy Bitcoin. They rejected him also. And then he went to Pakistan and became an advisor for the Pakistani government to buy Bitcoin. So far, we haven't heard any news on Pakistan buying Bitcoin at all. But Michael Saylor is trying his best. If the United States is not going to buy it, any country will do for Michael Saylor, by the looks of it. The management of Bitcoin by the US government is indeed a key market factor, especially with the existence of the street Bitcoin reserves. Certainly, Benson essentially announcement did not lead to massive sales by the government. Nonetheless, it casts a shadow over the short-term prospects for the flagship cryptocurrency. Just to mention that one more time, just in case the Bitcoin maxis didn't hear that in the back, in case they are watching this live show right now, it cast a shadow over the short-term prospects for the flagship cryptocurrency. According to the crypto analysis, the US strategy of acquiring Bitcoin was one of the main drivers of the essentially optimism on that matter. Indeed, the government had previously announced it would fund its digital reserves with confiscated assets, which is true. However, this strategy now appears abandoned. This might lead to investors to wonder whether financial institutions will continue buying Bitcoin. Because if the US is saying, yeah, we're not going to buy Bitcoin, maybe there's something wrong with Bitcoin. That's why the US government is not buying Bitcoin. Because think about it. This is the US government, the same government that will jump on any bandwagon if there's money to be made. If there is oil, the US government is there. If there is gold, the US government is there. If there is precious metals to be made money on, the US government is there, which means there is no money in Bitcoin, because the US government is not there. The decline in Bitcoin street reserves could also indicate a slowdown in the institutional adoption of Bitcoin, especially since more and more people are seeking financial alternatives. I'll tell you what, when the alternative ETFs get launched, the XRP ETFs, the Solana ETFs, the Cardano ETFs, the HBAR ETFs, and so on, they're definitely going to give Bitcoin and Ethereum a run for their money. Definitely. Because they're not buying it. So now it just goes to utility, because the buying factor of Bitcoin is its limited token supply, and that the US government is going to buy Bitcoin. 5% of Bitcoin supply was always told to us. Senator Cynthia Luminous, for the longest time, told us 5% supply of Bitcoin, the US will buy it. By the looks of it, no, they're not. Which means companies now are going to be, institutions and banks are going to now look at Bitcoin and go, well, what's the point? What's the point of even investing into it? We might as well go to utility. So now we're going to see that transfer of wealth happening, where institutions and banks go, well, we might as well just go towards utility, because we were only buying Bitcoin because the US government said we'll buy 5% supply of Bitcoin. Because if the US buys 5% supply of Bitcoin, then Singapore will buy 2% supply of Bitcoin, and Hong Kong will buy some supply, and EU will buy some supply, and the Middle Eastern countries will buy some supply. But if they're not doing it, then nobody else is. Which means we're the only ones buying Bitcoin. So why would we do that? You would rather put our money into utility, which is what's going to be happening slowly because we're in regulations. And essentially, this is the funniest thing that's came out today. Bitcoin maxis are obviously sad about this announcement because, Bitcoin maxis saw this as, the opportunity to gloat that the US government sees Bitcoin as the golden goose. But to the US government, Bitcoin is not really a golden goose. It's not even a golden egg. It's more like a rotten egg by this point. Michael Saylor is going to be filing for a Chapter 11 or Chapter 15 bankruptcy somewhere down the road, maybe in a few years, I would have to say. If he can't get Microsoft or Meta or Apple or Samsung or any of these bigger corporations to buy it, then who the hell is? Maybe it's time for Michael Saylor to jump ship and start going to utility. It's a good thing he didn't call his company Bitcoin Strategy. It's just called Strategy, which means he can change his strategy. Now, one of the largest financial companies out there has decided to enter the cryptocurrency space. Before we go into that news, let's go inside the comment section first. Let's see where we're at inside the comment section. As I said, this is live as always, which means if you do have any questions or comments, put them down inside the comment section. More than happy to help you out. But this is, to me, it's funny news. The Bitcoin maxis, they're crying in the corner right now by themselves. Let's go CMF, share the live and leave a comment. If you can, that would be great. Absolute facts. Like and comment to this live if you already haven't CMF members. So far we have 12 likes and 14 retweets. Let's go. If you haven't liked or retweeted and you're watching this on X, please like and retweet. If you're watching this on YouTube, just drop a like. Circle is having its own blockchain. How is it going to affect Ripple? Yes, I've seen this news, and some Bitcoin maxis are going around on X right now, even on TikTok, and saying that Circle is going to give the Ripple or the XRP ledger, or essentially RLUSD, a run for its money. Circle isn't going to be giving a run to anyone for their money, to be fairly honest. Circle was the same stablecoin that depegged once. That bad reputation is going to follow them like a bad smell for the rest of their lives. I'll be very honest with you. As much as Circle wants to try to boost its image the further it goes down the line, I mean, it's a good move, as I reviewed a few nights ago regarding Circle introducing their own ARC, essentially, which means they're going to start using USDC for gas fees, realizing that maybe it was a stupid idea to build on Ethereum because it's so expensive and so slow. But there is no hope in hell for Circle in the long run, to be able to beat the utility that essentially the XRP ledger brings in terms of finance, in terms of the RLUSD. Yes, USDC has a lot more money spinning inside of it, and the simplest term to put it. That's only because they got a head start on the matter of stable coins. RLUSD will climb the rankings the right way, is what I would have to say. Also, the amount of institutions behind essentially Ripple is just ridiculous worldwide. And also RLUSD's percentage in terms of climbing is huge. Climbing rapidly, I would have to say. But yeah, a lot of people are creating, essentially Bitcoin maxis. They keep on coming out and saying, oh, Circle is going to give Ripple a run for their money, for their stable coin. No, they're not. Let's just be honest with ourselves. USDT struggles to show transparency. USDC struggled to peg to its $1 valuation. RLUSD, fully transparent. Fast, scalable, reliable, regulated. There's a difference. But good question, Joe, because a lot of people might want to know about that. Good evening, Miles and CMF. Orphan, good to see you as well. How you doing? How you been? Hi there, Miles. Hope you slept well last night. I did, Susie. I'll be honest, yesterday's live, I did it with a few hours sleep. I only had a few hours sleep yesterday when I did the live, but, essentially last night I slept a lot. Straight after live, I fell asleep like a baby. Happy Pisces, good to see you as well. How you doing? How you been? I love the sound of "I told you so," Mr. Sailor, in your voice. Let's go with Pisces. I don't think Michael is sleeping well these days. Neither do I, I'll be honest. So when you think it's time for XRP to get to $50, please give me a time frame. I couldn't give you a time frame, but I could tell you it's not that far away. And what I would say always, as I say to you, consider variable change. You may see a lot of other countries taking a step back from it as well. Facts. Good evening, Curtis. Good to see you as well. How you doing? Evening. Good evening, Miles and CMF. Bull XRP. Good to see you as well. How you doing? Hi, Miles and CMF. Stormy. Good to see you as well. How you doing? Hello. How's it going? Woodhouse. Good to see you as well, brother. How you doing? Could the US just be saying they are not buying BTC, but actually will be just so that the US can buy it cheaper? No. The US can afford it if they wanted to. Also, the reason why the US isn't allowed to buy it silently is because if they do end up buying Bitcoin, they're going to be using tax-paid dollars. So they can't use tax dollars to buy an asset without telling the public because it's their money. So if the US does decide to buy Bitcoin, then they have to declare it that they're buying Bitcoin. Otherwise, the senators, the governors who hate Donald Trump are going to make a massive big deal out of it and create some sort of a tax fraud situation where the president of the United States is stealing tax-paid dollars buying Bitcoin. It will be this big, massive, big issue. Let's just put it that way. So no, the US government cannot be buying Bitcoin silent in any sort of way, because if they do, they have to essentially use tax-paying dollars, or they would have to sell some alternative assets inside the US to buy it, which still they would have to declare it. So no, they can't buy it silently in any sort of a way. They have to declare it before they buy it. Hi, Miles, and good evening to all. Strawberry, how you doing? How's things? Facts. US government always take an interest, but cover it with safety or freedom. What is this I saw on TikTok today about Ada joining up with Ripple in this? Again, more BS. I've not looked into. No, it's not BS. Ada has essentially joined up. Cardano joined with Ripple a while ago, to be fairly honest. I shared on this live regarding Cardano and Ripple and essentially XRP Ledger and Ada coming together. No, the partnership is quite genuine, to be fairly honest. Now, one of the largest companies in the US to take a step into cryptocurrencies could be a game changer. Citigroup plans to offer custody and settlement services for stablecoins and crypto ETFs, according to a senior executive who essentially spoke to retainers today. While the bank primarily focuses on custody of high-quality assets backing stablecoins, it is also exploring custody of digital assets right now, backing cryptocurrency-based investments products such as essentially ETFs. Citigroup also aims to use stablecoins, increase speed and efficiency in cross-border payments right now, and develop solutions that offer instant settlements. Currently, the bank operates such a blockchain-based payment network capable of 24/7 tokenized dollar transfers between New York, London, and Hong Kong. New plans include stablecoin transfers and the ability to convert essentially them to dollars for instant payments. Citigroup essentially actions follow sweeping policy changes in Washington, with the US Congress passing legislation last month paving the way for widespread use of stablecoins in areas such as payments and settlements. The new law requires stablecoin issuers to be backed by safe assets, such as US Treasury bonds or cash. This creates essentially new business opportunities for traditional custodian banks. Custody of essentially high-quality assets, essentially backing stablecoins, is the first option we are exploring, said Bishop, the head of essentially global partnerships. The bank has also considered providing custody of digital assets, which is required for products like Bitcoin spot ETFs, which the US Securities Exchange Commission essentially approved last year. Noting that BlackRock's iShares Bitcoin Trust essentially is the market's largest Bitcoin ETF, has essentially a market value of approximately $90 billion. He said an equivalent amount of digital assets needs to be safely stored to support these ETFs. Coinbase currently dominates the crypto ETF custody market, serving over 80% of the issuers in the space. So Citigroup coming out, big announcement. Essentially, they want to be more involved inside the crypto space, especially regarding stablecoins, since the law essentially was passed in the Genius Act a while ago. Brilliant move from Citibank. It's great to see institutions, taking bigger steps inside the crypto space, getting more comfortable because of the legislations in place. Honestly, amazing to see. Now, adds also that credibility towards the market space that we need towards the crypto market space to get more institutions involved. When you hear big names involved, the smaller names and the medium-sized names will also enter through. It creates some sort of a ripple effect. Now, JP Morgan highlights Ethereum stablecoin growth as key market driver. JP Morgan comes out today and essentially says that, well, their analyst departments come out today and said that Ethereum is essentially a key market driver. JP Morgan's report highlights Ethereum stablecoin scale growth as a driver, essentially a key driver for its positive market dynamics, sparked by regulatory frameworks and investments and institutional involvement as of 2025. This development positions Ethereum as a major player inside the crypto space, influencing ETH's market trends and enhancing its role as essentially in DeFi and stablecoin ecosystems. According to JP Morgan, the Ethereum ecosystem stablecoin expansion has significantly impacted the ETH market by increasing value and activity. Regulatory support through the Genius Act and institutional capital flows have played central roles in this trend. JP Morgan essentially analysis suggests Ethereum's network is pivotal for stablecoin growth, accommodating most stablecoin assets. Analysts note Ethereum's infrastructure can now directly support anticipated stablecoin scales, whether through layer 1 or essentially evolving layer 2 solutions. This stablecoin activity has essentially driven notable effects on the financial markets, with Ethereum's market cap now rising considerably. Ethereum's ETPs also witnessed a record net inflows, demonstrating robust institutional adoption and confidence in Ethereum's ecosystem. Economically, Ethereum dominates DeFi activities with a commanding essentially 51% stablecoin dominance. JP Morgan's analysts also noted that Ethereum now leads essentially with $223 billion in TVL, commanding essentially 51% of that dominance. Essentially, this dominance and increased DeFi activity generates momentum for correlated assets like BTC and major stablecoins in the ecosystem. The Genius Act also passage clarified the regulatory conditions for stablecoins, reinforcing in terms of institutional participation in Ethereum. This clarity essentially facilitates secure capital deployments for treasury and settlement as among financial entities globally. Long-term Ethereum stablecoin scope could signal transformative financial models. Historical trends do show that stablecoin inflows previously fueled Ethereum in terms of rallies. Current regulatory and institutional support suggests a larger financial impact than past cycles. So, JP Morgan comes out with a newest report and suggesting that Ethereum is the key driver for this market space. It's the key driver for stablecoins. It dominates the stablecoin space. One thing they forgot to mention is that Circle decided to slowly move away and create its own essentially chain, you could pretty much say, and start using their own token for fees, no longer Ethereum. Well, that's the main thing they forgot to say. Also, the slow part and essentially the costly part, they also forgot to say that as well. But obviously, those aren't selling factors. You got to make it, interesting for the reader. Now, moving on to what essentially JP Morgan said regarding who runs the show. And it's also because JP Morgan developed their own blockchain on ETH. They're not going to be coming out and saying it's stone expensive. Instead, they're going to be coming out praising it, hoping somebody else jumps on the bandwagon too. Now, moving on from essentially JP Morgan's news perspective on that matter to Hedera, which is something we haven't talked about a while, which is also, a great project. It has a great future ahead of itself. Kayo bridges traditional finance and DeFi with Hedera integration is what we're going to talk about next. But before we talk about that, let's go start a conversation first. As I said previously, this is live, which means if you do have any questions or statements, put it down in the comment section. More than happy to help you out. So let's go start a conversation first before we go through the next news on tonight's live. Let's see where we're at. We were at here. Good evening, Miles and CMF. Lena, good to see you. How you doing? Hi, Miles. Can you please urgently read my message? Please need your help quick. I don't mind if you reply to me on the live. Where is your message on? Where did you write your message? Can you message me on X? Message me on X if you can, because I have X open on my screen right now. So message me on X. I don't have anything else open on my screen. I don't have my Telegram open on my screen or my WhatsApp or anything else. So just message me on X right now and let me see what I can do for you. Hi, Miles and CMF. Peg, good to see you as well. How you doing? How you been? But yeah, Crypto Don't, just message me on X right now. Just send me a direct message. and then I can help you if you want. I can, as you said, help you on the live, no problem. Now, Kayo just rewired institutional essentially investing by bridging BlackRock, Braven Howard, and Laser Digital funds on-chain via Hedera, creating essentially a real bridge between regulated money markets and programmable DeFi liquidity. A protocol purpose built for real-world assets has onboarded essentially 3 heavyweight institutional funds, including BlackRock, ICE, essentially US dollar liquidity fund, Braven Howard's master fund, and Laser Digital essentially carry fund onto the Hedera network. So Kayo Bridge decides to bring all of those networks on Hedera's network, which is great for HBAR. The move marks the first time these traditionally opaque essentially investment vehicles have been tokenized at scale, granting accredited investors blockchain native access to strategies spanning money markets and macro trending, and essentially the crypto yield generation by leveraging Hedera's enterprise grade distributed ledger. Kayo's infrastructure ensures compliance while enabling programmable features like instant settlements and DeFi compatibility. Kayo's move to bring BlackRock, Braven Howard, and Laser Digital funds on-chain represents more than a technical upgrade. It's a structural shift in how institutional capital can interact with blockchain essentially ecosystems. This launch marks a critical essentially inflection point in institutional blockchain adoption. Oliver Dang, COO of Kayo, said, by using Hedera's network, we're bringing essentially access to leading fund strategies ranging from money market and macro to digital assets carry funds entirely on chain. It's the foundation for real-time, essentially programmable financial infrastructure built for the next era of capital markets. These essentially 3 funds now available live through Hedera, through Kayo's platform, represents a distant but equally critical pillars of modern finance. Laser Digital essentially carry fund, for example, isn't just a tokenized wrapper for crypto funds. It's also a Cayman registered vehicle now operating with blockchain native efficiencies, capturing essentially arbitrary opportunities and staking yields while maintaining institutional grade risk controls. Similarly, BlackRock's money market fund, with its $1.3 trillion in assets, could now theoretically serve as a collateral in DeFi protocols, a concept that would have been unthinkable within 2 years ago. Braven Howard's, in conclusion, equally telling, the hedge fund's participation suggests even though the most guarded essentially corners of TradeFi see value in on-chain programmability for subscriptions, redemptions, and reporting. So HBAR, BlackRock, Braven Howard's, and essentially carry funds, they're on the HBAR network. Are they directly on the? No, it's third party. So Kayo is pretty much acting like a third party to bring those essentially BlackRock, Braven Howard's, and carry on chain. They're doing it essentially on. They're doing it essentially on chain, on the Hedera network. Brilliant for HBAR, but just a word of warning, it's not direct. It's through essentially a third party, the simplest way to put it. But again, brilliant move for HBAR. Next news we're going to go through on tonight's lab is regarding essentially Hong Kong. But before we go through that, let's go start the comment section first. Then we'll go straight into the next news. So let's see where we're at inside the comment section. We were at here. Hi, Miles. Peg, good to see you. How you doing, Peg? DMs, Crypto Don. I message you next. Okay. I'll check now. So when we think peak will happen on call one, Johnny, give us some time. Morning, Miles of CMF. Shelly, good to see you as well. Morning, how you doing? Let's see what Crypto Dawn's message was. Your message is not here. Crypto Dawn, your message is not here. What's your name on X? Crypto Dawn 00. It's not here. Your message is not here. Crypto Dawn. How many zeros is that? 5. 1, 2, 3, 4, 5. Ah, here we go. Okay, messages. Ah, here you go. Crypto Don, are you okay with me reading this out loud? Crypto Don, are you okay with me reading this out? Because it's the only way I'm going to be able to say a perspective. Are you okay with me reading this out loud? Put yes or no. If it's a no, then I would have to reply back to you later because I can't reply back now. If it's a yes, I could give you a response now by reading it. Answer quick. Yes. Okay. So CryptoDom just messaged me. He said, "Hi Miles, not all details." He said, "Hi Miles, I recently had the police search my house. It had something to do with another family member. My seed phrase was, I should just reply back later." Okay, I'll reply back later. Okay. Well, just from that first line, I hope you're okay. But anyways, let's get back to the live. Sorry about that, everyone. But I'll reply back to you later. Hope everything's okay. Now, Hong Kong is what we're going to talk about next. Hong Kong's monetary authority and the SFC warned investors against speculative hype around stablecoin licensing. Hong Kong's top financial regulators have warned investors to exercise a restraint aimed essentially a flurry of speculation surrounding stablecoin licensing and the expansion essentially of cryptocurrency exchanges, ETFs. In a joint statement today, the Hong Kong Monetary Authority and the Securities and Essentially Futures Commission, SFC, said they had observed abrupt market movements linked essentially to the stablecoin sector in recent days. The volatility, they said, appeared to essentially follow corporate announcements, news reports, social media posts, or essentially speculation about applications to become licensed stablecoin issuers in Hong Kong. The warning essentially comes as two new spot cryptocurrency ETFs, the Microbit Bitcoin Spot ETF and the Microbit Ethereum Spot ETF, prepared to list on the Hong Kong Stock Exchange on August 21st. Further essentially boosting the city's growing roster of regulated digital asset products. The Hong Kong Monetary Authority, which is in charge of the city's stablecoin licensing or engaging with essential authorities, was just a part of the licensing process and should not be interpreted essentially as an endorsement or a guarantee of the approval. The approval threshold essentially are set very high, and only a handful of licenses will be granted initially, said Eddie, the chief executive. We have been in primary communication with dozens of parties regarding stablecoin licensing. Such communication is not an indicator of approval or endorsement of any entity prospects. Because the US has obviously passed that Stablecoin Act, the Genius Act regarding stablecoins, Hong Kong, Singapore, Japan, South Korea, Brazil, EU, everybody's jumping on the bandwagon of stablecoins right now. Hong Kong is getting very close to passing their stablecoin regulations, but they're saying, essentially, just because we're discussing it doesn't mean we're passing it straight away. The SFC, which oversees Hong Kong's securities markets, warned of misleading prospects of gain from short-term price volatility and the dangers of unsubstituted essentially claims, particularly on social media. Julia essentially Leng, the SFC chief executive, added that her agency will not hesitate in taking forceful, essential, and decisive actions to maintain market integrity and protect investors from undue risk. The cautionary statements came just a day after local media reported that Microbit 2 spot ETFs essentially had received approval for listing next week. Each will carry a 0.5% annual management fee, with BOC International Presidential Trustee serving as a custodian and administrative essentially manager, and Hashkey Exchange as the virtual asset trading platform. Once listed, they will join an expanding suite of crypto ETFs in the city. Since the launch of the essentially Pandu spot Bitcoin ETFs last month, Hong Kong, a regulated hub for cryptocurrency ETFs, is leading the way in Asia right now. With the addition of Microbits funds, there will be 9 spot crypto ETFs listed on the Hong Kong Stock Exchange. 9 ETFs are going to be listed on Hong Kong's stock exchange. Also in the US, we have a tremendous amount of ETF filings right now piled on top of each other inside essentially the SEC, but 9 are going to be passed essentially in Hong Kong, a lot more to be passed in the US. Hong Kong's licensing regimes for both virtual assets, trading platforms, and stablecoin issuers are viewed as a part of a broader effort to attract global crypto capital while keeping investor protection and market integrity at the forefront. While the ETF announcements have been welcomed by crypto industries as a sign of essentially Hong Kong's progressive stance, the joint statements from the Hong Kong Monetary Authority and the SFC speaks to the delicate balance of the city essentially attempting to strike between creating an environment for sustainable innovation and preventing speculative access. Market observers say that the recent run-up in the share prices of companies linked to stablecoin initiatives highlights the risk regulators are trying to contain. Some stocks have surged essentially on little more than unverified claims of plans to apply for a license, only to essentially fall sharply when expectations failed to materialize. Hong Kong is giving out licensing right now to stablecoin essentially issuers. Now, there's speculation and rumors going around of who's going to be passed and who isn't. In Hong Kong, saying stop listening to the rumors. We haven't passed anyone in any sort of a way yet to green light them. So what's going on right now is just speculation inside the market space. Don't jump on any blockchain's bandwagon because you might assume we're going to give them a green light, which is fair enough, understandable. But putting that to one side, what we care about is Hong Kong has 9 ETFs on the table, which they've only revealed 2 of them. The rest they haven't revealed in any sort of a way. 2 of them have been revealed, Bitcoin and Ethereum. The rest haven't been. They already have a Bitcoin ETF, but they're adding more of all the alternatives as well. Again, they haven't mentioned which ones are. That's what I'm more interested about because that's just adds liquidity to the table. And we know for a fact now that China is using Hong Kong as a playground for themselves, pretty much. I mean, they're launching their Chinese CBDC in Hong Kong. They're using Chinese, essentially Hong Kong banks, well, they're technically Chinese banks, to fund themselves in projects and so on. So, brilliant. Let's just see what they are as time goes by. Now, and that Hong Kong wants to be known as the financial hub for ETFs in the Asian market space, which is better because it adds more liquidity to the table, makes a lot more Asian countries jump on the bandwagon as well. Now, moving on from that to Block is what we're going to talk about next. But before we talk about Block and Bitcoin mining, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or statements, put it down inside the comment section. More than happy to help you out. So let's see where we're at inside the comment section. We were at here. Not all details. Actually, just reply back later. I sent you a message on Telegram a minute ago. Happy Pisces. I'll check it out after the live. No problem. I don't ever have my Telegram open when I go live. Only X is open. So if anybody ever wants to message me during the live, you can message me on X. Now, Block. Block unveils Bitcoin mining rig built to last a decade. Block Inc. has rolled out a new modular cryptocurrency mining system. It says it could double or triple the lifespan of mining hardware and reduce the operating cost, a relief for miners facing high capital expenses and essentially a very tough market, essentially, economics. The proto rig unveiled today at Core Scientific Facility in essentially Dalton, Georgia, is set to replace the typical 3 to 5 year mining rig cycle with hardware that can last a decade or more. Instead of scrapping the entire units, miners can swap out individual essentially hash boards as technology improves, potentially trimming upgrade costs by as much as 20% per cycle. And Block also introduced a proto fleet, an open essentially source fleet management platform aimed at large scale operations. This could actually make a lot of money for Block, a humongous amount of money for Block. The launch marks essentially Block's latest move in the mining hardware market. In April 2024, it developed a 3 essentially nanometer Bitcoin mining chip and later signed a supply deal with Core Scientific. Mining remains essentially one of the most capital-intensive corners of the crypto industry, with top-tier rigs often priced about $10,000 before factoring in substantial electricity costs. At current essentially Bitcoin prices, miners are producing more than $50 million worth of BTC daily. Through margins depend heavily essentially on power costs, network difficulties, and hardware difficulties as well, inefficiencies. Industry responses has been upbeat. Platform CTO Camden essentially said Block's open source modular approach aligns with Bitcoin's original decentralized ethos and could essentially reduce the dependency on dominant equipment suppliers like Bitmain, very bad for Bitmain. The hardware is designed to last longer than develop essentially more power per racket foot, something the industry has essentially needed for a decade. So Block could potentially climb the rankings as a very competitive essentially company now because of this modular field, because there are two massive corporations that sell Bitcoin mining rigs and they pretty much dominated this space. With Block coming out with a modular essentially mining rig, it could make Block a lot of money, and people who bet on Block, they could also make a lot of money as well in the long term. That's if anybody wants to go into Bitcoin mining. Now that the US is not buying it, maybe Block could sell it to Michael Saylor, because we know he's buying anything related to Bitcoin. Google is what we're going to talk about next on tonight's live. Yesterday, I revealed to everybody that Google Play has decided to go after essentially crypto wallets on their platform. So if you want to be a crypto wallet on the Google Play Store, you have to have a license according to a certain date. Google, yesterday, releasing this news, got tremendous backlash because they were trying to remove crypto apps for not having licensing, which makes sense and doesn't make sense, because having licensing, fair enough, because it keeps the crypto space safe. There's a lot of fake crypto wallet apps on the Google Play Store, so licensing could bring some trust and transparency to the table. So when someone goes to download a wallet of Google Play Store, they can see it has a license, which means it's approved, which means it's genuine. And then when they go to download another wallet and it doesn't have a license, then they know which one to stay away from. But otherwise, that wallet's going to be removed anyways. Now, the issue arises with non-custodial wallets, essentially, even like DeFi wallets, because who's going to apply for the license for a DeFi wallet? It's just created by a few developers. It's not a company. Anybody can jump on and add some code. So that's where the issue arises, where Google was trying to move to centralized crypto rather than decentralized and centralized crypto. And it got tremendous amount of backlash, which is why we have an update today from Google. Google Play Store will require crypto exchanges and custodial wallet apps to obtain regulatory licenses for publishing by October 29th, 2025. Non-custodial wallets are exempt following industry feedback. So non-custodial wallets no longer need a license, and that's okay. Yesterday, they needed a license. Today, they don't need a license anymore. The new policy could create barriers for smaller crypto developers while potentially impacting market operations and driving innovation and decentralized solutions aimed at regulatory constraints. Google Play Store has announced a new policy requiring crypto exchanges and custodial wallet apps to obtain regulatory licenses by October 29, 2025. This policy aims to align with global regulatory standards following extensive industry discussions. Major regions affected include the United States, the EU, UK, and Japan. Regulatory bodies such as FinCEN and FCA will oversee compliance. What's interesting is yesterday, they said the only jurisdictions under this book is the US and the UK. Today, they're coming out and saying the US, the EU, yesterday, Google Play said United States and EU. Today, they're coming out saying United States, EU, UK, and Japan. More countries are added to the list. The crypto community, including major developers, has expressed concerns about potential barriers for smaller teams. The policy could cause financial strains, especially for smaller developers facing high license costs. Larger entities like Coinbase and Binance are already compliant in most regions, but may encounter increased oversight in new jurisdictions. In the financial markets, custodial wallets and exchange tokens such as BNB and CRO might be directly essentially impacted, particularly as they seek compliance across different regions. Non-custodial wallets essentially now face fewer immediate hurdles, but may still experience market fluctuations. So for the time being, Google doesn't want licensing for non-custodial wallets. It's okay. but nobody knows what they'll essentially decide to do somewhere down the road. Industry experts agree that while regulatory compliance is necessary, it could drive users towards decentralized solutions if non-custodial operations are restricted. Arthur Hayes, the co-founder of BitMEX, stated regulatory choke points eventually drives users towards decentralized solutions. If Google essentially Play blocks non-custodial wallets, users will simply move elsewhere, which is true, which is exactly what I said yesterday. I said, essentially, if you use an Android phone, you could just go to third-party app stores and download the wallets you want, if Google Play is going to be restricting you, let's just say. But yeah, Google has decided to tweak it a little bit. Non-custodial wallets are okay. They don't need licensing. Yesterday, every type of wallet needed licensing. Also, yesterday, it was just the US and the EU. Today, it's the US, the EU, Japan, and the UK that need licensings on their app stores for crypto apps. Now, SEC is what we're going to talk about next. And Ethereum. Sorry, SEC and Solana is what we'll talk about next. SEC essentially acknowledges Invincigo's Galaxy's filing for a Solana ETF. The SEC acknowledgement of Invincigo's Galaxy Spot Solana ETF filing initiates a crucial review process with expected market shifts by October 2025. This action symbolizes potential growth in Solana's market influence, drawing institutional interest and signaling a pivotal moment for digital asset investments. The US SEC has acknowledged Invincigo's Galaxy filing for Spot ETF. The acknowledgement could pave the way for institutional investments, affecting Solana's market and related shares. The SEC's acknowledgement of Invincigo Galaxy Spot Solana ETF represents a significant step in the ETF process, and institutional investors are essentially waiting on the sidelines for any sort of alternative ETFs to be coming out. So far, the SEC has acknowledged 2 ETFs, as far as I'm aware. One of them is XRP for one particular filing, and the other one now is for Solana. So they've acknowledged 2 ETFs so far. The XRP one, they acknowledged it before they walked away from the Ripple case, was when they essentially acknowledged one XRP ETF, which is when I said that's an indication that going forward, they're probably going to let the case go. The acknowledgement could lead to increased institutional focus on Solana, affecting its market dynamics and valuations. Financial markets anticipate a decision in October 2025, potentially increasing liquidity on Solana's DeFi operations. Derivatives markets signal strong optimism, reflecting a high approval likelihood. Past spot ETF approvals for Bitcoin and Ethereum have resulted in substantial market gains in liquidity, essentially increases. These precedent indicates have possibly similar outcomes for Solana-related assets. Data trends essentially suggest a positive market response if approval is granted. Expert opinions echo optimism, expecting essentially increased institutional exposure and investments in Solana if approved. Solana ETF approval odds in August are low, but the SEC could make accelerated approvals. Well, we've seen the SEC, essentially make sooner movements regarding, for example, the Ripple case. That was one of them. They made a much more sooner, essentially, decision on that matter. They didn't wait to the last minute. But so far, the SEC has acknowledged 2 ETFs. One is XRP related, which was acknowledged before the Ripple case, and 2 now is the Solana one. Are we getting ready for ETF releasements? Looks like it. The UK is what we're going to talk about next. It seems like the UK market space is actually growing on paper. In reality, it's a different story. But on paper, the UK's GDP seems like it's grown. About 0.3% we're sitting at right now. In Q2, beating G7 peers, the UK is doing better than other G7 countries. The UK economy grew significantly from April to June, expanding its gross domestic products GDP by just 0.3%. August, essentially, analysts from retainers and the Bank of England had forecasted a 0.1% growth in the second quarter of 2025, but somehow we're at 0.3%. The country's economy also seems to be performing better than the G7 on essentially a half-a-year basis. It surpassed the growth with an annualized rate of essentially 2.2% with both Q1 and Q2. The UK's 0.3% growth in Q2 matched France, while essentially Canada's remained flat, and Germany and Italy contracted by essentially 0.1% each. The US outpaced the UK with 0.7% GDP in Q2. According to essentially the Office of National Statistics, Britain's Q2 report was better than its essentially 3 better than its first 3 months of the year, where it faced the effects of Trump's heightened tariffs on imports. The GDP rose 0.7% as businesses rushed to prepare for the US trade policies. The UK's Q2 growth also grew by 1.2% compared to the same quarter a year ago. As reported earlier by Cryptocopter, the country's economic activity in April and May weakened as businesses import goods earlier in the year to avoid the stamp duty change and levy changes. Growth rebounded in June from services, the largest sector of the economy, while the computer essentially programming, health, and vehicle leasing essentially performing well, according to the Director of Economic Statistics. She also reviewed essentially the scientific research and development productions of electronics, as well as engineering and car sales are all attributed to strong growth in June. Government essentially spending had the most impact on growth, driven by spending on health, especially essentially vaccinations and vacations and public administrations and defense. According to the ONS, the construction also performed well in Q2, climbing essentially 1.2% due to UK private housing activity. Manufacturing also essentially saw a 0.3% surge, while machinery and equipment grew by essentially 3.0%. Rachel Reeves, the Chancellor of essentially the UK, who nobody respects, argued essentially that the country had positive growth with a strong essentially start to the year and continued growth in the second quarter. She also believes there is more for the economy to deliver to British citizens. Just to give you a little example, Rachel Reeves is like our Elizabeth Warren. Do you know how in the US you have Senator Elizabeth Warren, which nobody respects. Nobody likes Pocahontas. So Elizabeth Warren US, Rachel Reeves UK is pretty much the comparison. And I know that the British economy has the key ingredients for success, but has felt stuck for too long. That is why we're investing to rebuild our national infrastructure, cutting back on red tape to get Britain building again and boosting the national minimum wage to make work pay. There's more to do, she said, Rachel Reeves. The UK's exports also surged by 1.6% year on year, largely due to stronger services and exports. Imports also rose by 1.4%, driven by essentially a rise in goods and imports in the midst of essentially global trade wars, as previously reported by Cryptocopter. Britain's nominal GDP rose by 0.8% from April to June, rising 5.3% higher compared to the same quarter of the year. Just to put it in perspective, UK economy on paper is immaculate. In reality, it's down the drain. But on paper, because the reports came out good, it's going to give a green light to institutions, to investors, to traders, to spend some more money on riskier assets, because the data came out good, everybody's good, we're all making money apparently, nobody's poor in the UK, the GDP is up, we're doing better than the rest of the G7 countries in La La Land, which means it's going to give the green light to investors and traders to go towards alternative, riskier assets, which could be good for the crypto space. But unfortunately, the news came out exactly on the day that the PPI data report came out, and exactly on the day Scott Benson decided to go on live news and say nobody's buying Bitcoin. Well, I mean, the US isn't buying Bitcoin, which also equals to nobody's buying Bitcoin for other countries around them. But yeah, UK, Rachel Reeves, coming out with a report that the UK government is boosting our economy. I'm not sure which UK they're talking about. Now, Norway is what we're talking about next. Norway's sovereign wealth fund expands crypto exposures to essentially $862 million. Apparently, Norway $1.5 trillion sovereign wealth fund has quietly increased its indirect exposure to essentially Bitcoin ETFs. The position, built essentially through the stakes in publicly traded companies holding Bitcoin, climbed to 87.7% over the past 6 months and nearly 193% in the past year. So Norway's isn't directly investing into Bitcoin. They're technically not even buying Bitcoin ETFs. What they're actually doing is investing into companies who are into Bitcoin ETFs. Indirect BTC exposure has hit new alternatives of essentially 7,161 Bitcoins. The government pension fund Global is managed by Norges Bank Investment Management, a unit essentially of the country's central bank, overseen by the Ministry of Finance. The fund's indirect holdings stem from ownership stakes in MicroStrategy, Block, Coinbase, Marathon Digital, and Japan's MetaPlanet. So you can see what they're investing into. The MBIM's largest single exposure comes via MicroStrategy, where it now owns 1% of MicroStrategy is owned by Norway, you could pretty much say. The business intelligence and Bitcoin treasury firm, up from 0.72% at the end of 2024. MicroStrategy owns essentially aggressive Bitcoin purchasing, adding 145,945 Bitcoins in its first half of 2025, contributed most of essentially the 3,340 Bitcoins increase essentially in MBIM essentially exposure this year. Other crypto-related investments, including Block and Marathon Digital, also added to the total. K33 estimates that the fund's Bitcoin exposure equates to about 1,387 Norwegian essential coin, which is about $138 per citizen, was invested into these companies: Block, Marathon Digital, MetaPlanet, and MicroStrategy. I'm guessing Norway didn't get the memo that the US is not buying Bitcoin, but I mean, at least their investments were in companies. Although one of those companies has just been buying Bitcoin back to back. But, you know, news has come out now. Norway has been investing into, Norway's wealth fund has been investing into MetaPlanet, MicroStrategy, Marathon Digital, and Block. It would not, I mean, now it would be interesting to see Norway's face reaction when Scott Benson went on live news today and said the US is not buying Bitcoin. Because everybody assumed the US was going to buy Bitcoin because they said they want to buy 5% supply of Bitcoin. But now they're coming out and saying they want to buy 0% of Bitcoin. Now, putting that to one side, we're going to be talking about next regarding Trump. Trump's administration is now eyeing 11 people to replace Jerome Powell. 11 people are on the list to replace him now. The Trump administration is considering 11 potential replacements for Federal Reserve Chairman Jerome Powell when his term ends in May 2026, including new names like David Zeros and Rick Ryder. The list unveiling could reshape monetary policy directions, impacting both traditional markets and cryptocurrency assets, as candidates essentially bring diverse backgrounds from major financial institutions. The Trump administration's Federal Reserve candidates list now includes previously unnamed figures, including David Zeros, Larry essentially Lindsay, Rick Ryder. These new essentially candidates bring diverse financial backgrounds, highlighting mixture of Wall Street experience and policymaking expertise. Observers essentially suggest this implies an openness to varied monetary policy approaches. Market stakeholders are essentially particularly interested in how BlackRock and Jefferies representatives could influence Fed decisions. This development raises questions around potential shifts in monetary policy and strategies and the possible essentially impacts on global and national financial dynamics. The selection could affect interest rates and overall market liquidity. Managing large-scale bond portfolios requires keen insights into the Fed's policy shifts, said essentially Rick Ryder, the chief investment officer at the global fixed income at essentially BlackRock. Research teams also suggest that the shifts in Federal Reserves and leaderships impact both traditional finance and digital currencies. Historically, changes can generate ripple effects influencing liquidity and speculative markets alike. Analysts urge cautious as the full implementations unfold. So far, 11 people have been chosen to replace Jerome Powell. Also, Jerome Powell might be sued. We don't know. That's based on a rumor that's coming out, essentially, that there is legal action that's going to be taken. That's only because Trump said legal action when he mentioned Jerome Powell. So there's rumors that's going around, which I've revealed as well, that there might be a possibility of his suing. So he could be lifted from his seat at a much more earlier date. If he doesn't get lifted, essentially, now, then he has to obviously naturally leave when his time comes to an end. But so far, 11 people have been chosen to replace him. We can see Trump is very keen to remove him from his seat. Now, what we're going to be talking about next is BNY, who is also Ripple's custodian. BNY Mellon to become custodian of Open Eden's tokenized UST bill fund. The oldest bank inside the United States will become the primary manager of a fund for essentially digitalized treasury bills, spearheaded by a prominent real-world asset tokenization platform. The entity has already achieved several notable milestones and advancements in the DeFi essentially space, and the latest accomplishments is another testament to their commitment. The corporate essentially brand of the Bank of New York Mellon announced on a press release that OpenEden, a real-world asset tokenization platform, will appoint the bank members as investment managers and primary courtiers of its tokenized US Treasury bills T-Build fund. This is the first fund essentially of its sort to receive a grade A investment rating from Moody's, a renowned credit essentially rating agency. This strict partnership essentially underscores the commitments of both companies to shaping the future of financial infrastructures by bringing essentially compliant and institutional grade assets to the blockchain. OpenEden's fund was launched in 2023 and has since provided investors with exposures to a portfolio of short-term treasury bills and essentially reserve repurchase agreements that happen overnight through the issuance of T-bill tokens. The T-bill essentially fund has seen rapid, steady essentially adoptions, indicating an ever-increasing demand from the patrons essentially for regulated on-chain capital management solutions. BNY Investments Dreyfus, one of the largest liquidity essentially managers and essentially decades of expertise, will oversee the fund on behalf of the tokenization platform as a sub-manager to further essentially its mission of crafting the financial framework of the future. The bank will also serve as a primary custodian for the underlying asset. They will leverage their essentially already established infrastructure, which is responsible for over $55 trillion in funds, and their track record of providing solutions that enable digital asset ecosystems. The CEO and founder of OpenEden shared a few words to commemorate this partnership. OpenEden's collaboration with BNY marks a critical milestone in our mission to deliver secure, transparent, and institution-ready tokenized financial products. Combining our tokenization platform with BNY's global scale and deep essential expertise enables us to create a new standard for trust and access to the digital asset space. BNY has steadily been the forefront of incorporating digital assets into its global reach, with its essentially journey beginning in 2021 through an establishment of the essentially dedicated unit for its asset classes. Its primary focus was on building a unified platform that bridges traditional finance and decentralized finance asset custody services. In the same year, they also started offering Bitcoin custody services to their clients, followed by chain analysis integration to track cryptocurrency transactions at the start of 2022. And also, the current partnership they made an announcement recently about also with Ripple and RLUSD. OpenEden also has a relationship with Ripple, so it's interesting that BNY was chosen essentially by Ripple, and then about space of a few weeks passes, OpenEden, who's also very close to Ripple, announcement comes out there with BNY Mellon. You could almost say it's coordinated. Now, on the topic of Ripple, and that's for tokenization, on the topic of Ripple, XRP Ledger emerges as key financial infrastructure after 13 years of growth. So, David Schwartz explained that launching a blockchain is already difficult, but building an active, trusted ecosystem is much more harder. It requires developers, liquidity, trust, and real-world adoption, which is why XRP Ledger and XRP in itself is the best. The XRP Ledger, he said, has achieved that because it has been tested over time, upgraded regularly, and earned the confidence of institutions. David Schwartz also touched on the ongoing debates regarding decentralization. Some blockchains have permissioned validator sets controlled by one company or a small collection of companies. That strategy allows for ease of compliance and control in closed environments, but limits the reach and resilience. The XRP Ledger is permissionless and open in its fundamentals, but has optional permission instruments in place for those occasions where regulations is necessary. This combination provides the flexibility to adapt without remaining inaccessible to anyone. Its architecture enables connecting people, markets, and assets beyond borders and bringing various financial systems together. One of the XRP Ledger's biggest strengths is its cost efficiency. Transaction costs just fractions of a cent and don't require a separate gas token. Taking shots essentially at USDC, but now essentially USDC is taking its own token as a gas fee. Payments can be made directly in XRP, which act as a bridge asset for settlements and liquidity. Every transaction burns a tiny amount of XRP, reinforcing its role in the network. David Schwartz noted that newer blockchains are already making use of principles already deployed in the XRP ledger for years, including essentially finalities and proof of authority style consensus. This is where the direction the industry is going, into quicker and more predictable forms of settlement without costly validation. When looking ahead, David Short plans for the XRP ledger are to increase the level of programmability, include features that are compliance friendly, and create stronger liquidity for institutions. His final statements was that the crypto space continues to develop and has opportunities for new entrants to come in and participate in the broader space of digital finance. Absolute facts. Everything this man said on par, facts. This is why I say XRP ledger just takes the rankings. I mean, first starting with essentially, David Short explained that the launching a blockchain is already difficult. Yes, facts. But building an active, trusted ecosystem is much more harder. Facts. It requires developers, liquidity, trust, the biggest factor when it comes to crypto, and real-world adoption. The XRP ledger, he said, has achieved that. Everything he said. The XRP ledger has already achieved the trust of institutions, liquidity, yes, trust, yes, real world adoption, yes. These are pretty much what we know, but it's nice to see an approval coming from David Schwartz. Honestly, the future is looking day by day brighter and brighter. As I said, the markets might not be showing that, but it's also because of what I tweeted out today as well. I just wanted to say something regarding the tweet I sent out as well, which was, I know a lot of people are right now looking at the charts and going, what's happening here? Because the market's not moving fast enough, or essentially XRP is not moving fast enough, and so on. I think, people think to themselves, I thought the case finished. That means the market should move faster. Essentially, I thought Ripple's case ending, XRP using your shooting the moon. That was never going to be happening in the first place. It was just one green light. But what people need to understand is the ending, which is Ripple's case done. Regulations and ETFs next. Ripple bank license next. Ripple Fed master account next. We know this asset is going to blow past Bitcoin and Ethereum. Literally blow past Bitcoin and Ethereum. We know this asset is 10 times. Matter of fact, I'll take it a step further. XRP Ledger or XRP is a quadrillion times better than Ethereum and Bitcoin put together. Quadrillion times better than Bitcoin and Ethereum put together. And the entire ecosystem, to be fairly honest, the entire crypto space, the XRP Ledger, when it comes to finance, nothing compares to it. So honestly, you need to understand that yes, the markets ain't moving the way you want it to move. It's only because the house has to win. Otherwise, everybody would just put, as I put inside my tweet today, 200% X leverage on XRP, because we know the case is finished. We know the ETFs are next. We know the regulations are next, because 30th September is going to be another regulation, which is the Clarity Act. And essentially, in September is also going to be a possibility of a rate cut cherry on top. We know essentially Ripple's going to get a bank license. We know it's going to get a Fed account. We know the SEC is helping them now. We know it has the most amount of essentially licenses around the world. We know all these things. And so did the markets, and so does the house. But the house can't still let you win 24/7. The house has to win along the way. So there'll always be turbulence until we get to a stage where turbulence doesn't matter anymore. Because we're so fully into utility, we're so gone into utility, that turbulence doesn't even impact us anymore. So keep your heads down, keep focused. Don't ever, even for a second, lose hope on XRP. Even for a second. Because we know what the ending is going to be. And that's why I put that tweet of, we know XRP's path is up because of case win, regulations and ETFs, Ripple bank license, Ripple Fed master account, but expect turbulence. The house always needs to win along the way. If it was a straight shot, everyone would just put 200x leverage on XRP and sit back and relax. But the house doesn't want that. The house wants you to win, but along the way, because they want to also win too. Otherwise, the exchange is going to be paying out like their ATMs. On that note, as I've said, is there a timeline? on attending the bank license. It's in a few months, if I'm not mistaken. From the day they applied, a few months afterwards, we should get some sort of announcement, some sort of news and update on the matter. Great question, Shelley, because a lot of people might want to know the timeline of the bank license. But since the day essentially was signed in, filed in, within a few months, we should get an update, not the license itself, but we should get an update on the matter. Or the license itself, maybe. I'm surprised that not Gary Gensler isn't on the list for the Federal Reserve's job, as he's been after the position for a long time. That's a good point, Joe. I'll be very honest, because Gary Gensler did want to become the Fed chairman. His dreams were crushed. Same way, essentially, Michael Saylor's dreams were crushed when America said they're not buying Bitcoin. Such a sad day for Michael Saylor. All facts. House always wins. Great life. Take care, Miles and CMF. Ray, let's go. On that note, we have reached the endings of tonight's live. Oh no, you'll have a Pocahontas over in the UK too. Sorry to hear that, bro. Yes, we definitely have our own Pocahontas in the UK too. All facts. Ray, let's go. House wins. Always wins. Great life. Take care, Miles. CMF. Ray, see you tomorrow, sometimes usual. On that note, we have reached the endings of tonight's live. This was episode 355 of the CMF Live. The CMF stands for Crypto Miles family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. London time onwards, where I share the most recent news regarding cryptocurrency, CBDCs, AI, politics, and regulations. And on tonight's live, we talked about the XRP ledger in terms of a perspective coming from David Schwartz today. We talked about BNY Mellon, Ripple's custodian, also partnering up with another Ripple company. We also talked about tonight's live regarding Norway expanding essentially their footprints inside the crypto space. We talked about the UK apparently having some growth, which could be a positive for the crypto space. We talked about the SEC acknowledging essentially Solana ETFs. We talked about Google Play Store amending what they essentially released yesterday. We also went through news regarding Block unveiling a new concept for Bitcoin mining, which could potentially make them a lot of money. If anybody's betting on Block, it can make you a lot of money. Not financial advice at all. We also talked about Hong Kong regarding their essentially stablecoin laws and their licensings. We talked about Hedera on tonight's live also. We went through JP Morgan news highlighting their newest reports on the crypto space. We went through news regarding essentially Citigroup, Citibank coming out with new announcements of how much further they're going to be expanding into the crypto space. We talked about Scott Benson saying to the entire world, the United States of America is not buying Bitcoin. We also talked about tonight's live regarding the PPI data reports. So those are the news topics we went through on tonight's live. This was episode 355 of the CMF Live. Tune in tomorrow, 10 p.m. London time, for the most recent news of cryptocurrency, CBDCs, AI, politics, and regulations. And we also do Q&As on this live as well. So if you ever have any questions, put it down in the comment section. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So before we do go, let's consider the comment section first, and then we will call it a night. Good night, Miles and all CMF. Thank you for a great live and news. JP, see you tomorrow about the same time as usual. Thanks, Miles. Have a great night. See you tomorrow after work. Let's go autistic. See you tomorrow after work. Night, Miles and CMF. Pablo, see you tomorrow same time as usual. Miles, can you give us a reply after live? Yes, I'll give you a reply after live. No problem. Look at what he posted. I put it in the Telegram after he came off live TV. What does he mean by saying they will explore ways to acquire more BTC? Thank you, because I think people, the Bitcoin maxi groups, are very angry at what Scott Benson essentially said. And what they said previously before also was that they're going to be acquiring in other ways, but then he comes on live TV and says, we're not going to buy it. And then the Bitcoin maxis got angry at him for saying those things. So now he's coming out and saying, well, we're looking into alternative ways. They've been looking into alternative ways since they signed in essentially that executive order regarding essentially a Bitcoin treasury. Since the day they signed a Bitcoin treasury, they've been looking into alternative ways. Until today, he came out on the live news and said, we're not buying Bitcoin. And then today he's went back again saying, we're looking into alternative ways. They're going to be looking into alternative ways for the next decade. They're never going to be buying it by the looks of it. They might change their mind somewhere down the road. Thank you, Miles and CMF. Mike, see you tomorrow about the same time as usual. Thank you, loads, Miles. Enjoy the night, family. Let's go, Lena. Good night, Miles. Thanks for a very informative night. Let's go. See you tomorrow, same time as usual. Thanks, Miles. A lot of news to digest. As always, appreciate all you do for help us night and day. All Shelly, let's go. See you tomorrow, same time as usual. Great, Miles. Thanks, Miles. Stormy, see you tomorrow, same time as usual as well. Good night, Miles. Great show, Christopher. See you tomorrow, same time as usual. Thanks, Miles, for a great live. Good night. Michael, see you tomorrow, same time as usual. I will see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. Like, retweet, follow, subscribe if you already haven't. What is the next important dates for Ripple? Next month onwards, until the end of the year, it's all important dates every month because it's related to all the ETFs. I forgot to ask any guarantees for Putin's safety in Alaska tomorrow that you know of. No, I'll be honest, no updates whatsoever on that matter so far. What's going to be happening down there on Friday? We'll have to see tomorrow. Let's see what's going to be happening with Trump and Putin. Is that going to affect the market space in a good way or bad way, or in any sort of way at all? I will see everybody tomorrow, same time as usual. Great question here. See everybody tomorrow, same time as usual. Everybody have a great day or a good night. I joined late, but still gonna watch it again. Good night, Miles and CMF Talk. Let's go. See you tomorrow, same time as usual, brother. I'll see everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. Like, comment, retweet, follow, subscribe. If you already haven't, if you have, thank you so much. See everybody tomorrow, same time as usual. Everybody have a great day or a great night, depending on where you are.